Microsoft is set to report results after the close tomorrow. To prepare for this release, we're going to model out the guidance that management gave us from last quarter and take a look at where that stands relative to the consensus estimates heading into the release. Now, to do that, we're going to be using our Microsoft earnings model. Keep in mind throughout this demonstration, anywhere you see a blue cell, those represent our estimates. Purple cells represent company guidance, and orange cells represent consensus estimates. If you'd like full details of how this model works, please visit our website, gutenbergresearch.com. You can click on the Models in Focus tab, scroll down to the Microsoft model, and there you'll find full graphic description of how the different financial statements are interrelated, what cells we can change, and then there's a full demonstration video at the bottom of the page. So to get started, we're going to first go to the company's investor relations page and grab their guidance from last quarter. So starting with the revenue line item, you can see that for each one of the different segments, they give a range. And if you scroll down to our segment details in the model, you can see that we've set each one of those segments equal to the midpoint of that range. And when we sum up the total of each segment, we get to 21 billion, which is right in line with the current consensus estimate. Next item that they guide is cost of goods sold, and they guide that to the range of 7 billion to 7.2 billion. Again, we set our gross margin such that we meet the midpoint of that range. If you scroll down to the segment details, you can see that our model has a gross margin for each one of the different segments. And you can see what we had to do to get it to that midpoint. So, for instance, with the devices and consumer licensing segment, we had to set it to 93%, which is consistent with the first quarter of last year, and it's a bit lower than the fourth quarter of 2015, fiscal year 2015. So again, if you want to download this model, you can change any of these gross margin assumptions and see what the impact on valuation would be. Now the next item is the OPEX items, so R&D, sales and marketing, and general and administrative expenses, which management guided to 7.6 million to 7.7 billion. Scroll back up to the income statement, and you can see we hit the midpoint of that range, and it follows the same logic. Essentially, we've got all three of those OPEX items here, stated as a percentage of total revenue, and you can take a look at what it was last year and change it up or down if you want to just see what the different scenarios would be. Finally, they guide other income and expenses to an expense of 200 million, which is what we set up here in the income statement, 200 million. So after we model that, the only two items that could impact the EPS would be the tax rate and the share count. Now for tax rate, we're assuming they gave guidance for the full year, fiscal year 2016, at 24%. So obviously that'll vary from quarter to quarter, but for this quarter we're just assuming that it hits that target rate of 24%. Now for the diluted shares outstanding, there's some variance depending on what the total repurchase amount of shares was during the quarter. Scroll down to the bottom of our segment section, and you can see our assumptions there. We have $3 billion of shares repurchased at an average price of $45 a share, which may be a little bit too high, but either way, we're expected to retire 67 million shares. So you can change all those assumptions and see what the impact would be, but under that scenario, we get back to an EPS of 58 cents, which is exactly in line with the current consensus estimate. So what this tells us is that the street is in line with management's guidance, the midpoint of management's guidance, heading into this release, so we're not expecting any surprises here. But we'll take a look tomorrow after they release results, and we'll update our model at that point, so be sure to check our website for those details. Thanks for watching.